Now, Fitch has downgraded France's credit rating to A+ from AA-, citing an increased fragmentation and polarized domestic politics. And it comes just after President Macron named Sebastien Lecornu as Prime Minister following weeks of political turmoil over the country's budget. Lecornu has already made changes to his predecessor's proposals, dropping the plan to cut 2 public holidays, which was very controversial. Lecornu also signaled he would revisit discussions around a proposed wealth tax. So let's see how that is impacting the euro. Well, you can see it's pretty much flat there against the dollar, trading at a handle of 1.17. A lot of the action perhaps already priced in. Now let's get more with Charlotte. Charlotte, thank you so much for joining us, of course. So how does this all now complicate or impact the new French Prime Minister's job, this new credit rating?
Yeah, it was a bit of a surprise, this downgrade, but certainly a warning shot for the new Prime Minister that took the job just 2 days ago. So they're just showing the challenge ahead of him there. Fitch justifying the downgrade by the political fragmentation, the polarization. They're tackling public finances more difficult. They actually project the debt to increase to 2027 to 121% from 113 in 2024. And they said there's no clear horizon on when this might stabilize because of the political fragmentation. They said they expect that this will continue until the presidential election in 2027, with a high likelihood, and I'm quoting them there, that the political deadlock will continue beyond the election. And I guess this is it, instability and the no clear horizon when this might clear out that justify this downgrade. Now we know that Fitch is often seen as a first mover when it comes to ratings review, and we have S&P having their own rating review in October and Moody's in November. This could be the signal that maybe other agencies may follow suit. Now we had the reactions from the political class, of course, including François Bayrou, the outgoing, the ex-prime minister, the one who just left on Monday, who was ousted by a vote of confidence, saying a country whose elite, he was talking about the members of parliament, lead it to reject the truth is condemned to pay the price. So very stark warning there by François Bayrou. But certainly here we know that Sebastien Lecornu is continuing consultation to try to get a majority around the budget, because this is the key challenge there, try to tackle the deficit and try to get the budget on the road. But we know that 2 of his predecessors have failed on this issue. So he scrapped he scrapped the idea of scrapping 2 public holidays, as you mentioned, of course, something that potentially politically wasn't a very savvy move. So, he scrapped this straight away. But we know there are also 2 key days going forward. There's a national strike later this week, September 18th, after the protests that we saw last week. There were already a bit of a warning shot. And also farmers also announcing a day of action on September 25th. So multiple warning shots there for the new Prime Minister. A very tricky situation, and again, a political fragmentation that ties his hand to a certain extent on tackling these issues.
You mentioned multiple warning shots there, and I wanted to get your gauge on, when you're speaking to market participants, how they are looking at this now. Are they worried about further contagion? Do you think a lot of the action is already priced into the markets, or could we see investors get more nervous, particularly as you mentioned that we could get more credit downgrades?
Yeah, so that's what's really interesting is that last week when I was on the ground speaking to a lot of economists, they all didn't expect a downgrade to happen just yet. And I thought that all the market moves that we'd seen already in the French oats and all that, that all the political risk had been priced in already, because the government falling over the budget over the autumn was something that was expected to a certain extent. So there was no big surprise. Maybe it happened a little bit earlier when François Bayrou was ousted. So now it seems that, again, things are accelerating a little bit. And we've seen the moves in the French yield as well, getting closer and closer to Italy. Actually, some like Citi expect that there will be a parity between these by the end of this year. So certainly there is move. And certainly that means that for France, repaying that debt is becoming harder and harder. And so you are in this vicious cycle for France, where repaying the debt and tackling the deficit is getting harder and harder. But that causes more political fragmentation, which in its turn as well makes it more difficult. So we are stuck in this cycle at the moment.
Yes, certainly we have seen those French yields rising significantly on the 10-year. Thank you so much to our Charlotte Reed there.